Hello traders and welcome to a new sentiment analysis video of mine. So in today's video, we will be talking about interest rates with sentiment. I know that might not sound very interesting and something that you could probably like scalp or day trade with, but I will say that the kinds of interest rates that we're looking at today are going to be margin funding interest rates. So this is not like interest rates that fluctuate every few months because they're mandated by the Federal Reserve. These are interest rates that are set by supply and demand, and we can use these factors of supply and demand to gauge what people are going to do in the market, and in that way we can gauge where we think the market will go, and that way we can make money off of the market. So to start off with, here I have my Patreon, and the most popular video was sentiment analysis new and improved, so that is why I'm going to be doing this video today. We had a second place, Cryptocurrency Signal Finder Part 2. Last place, not much interest in the volume profile expert level. I guess this part kind of threw people off. Yeah. Okay, so let's get into the main topic. This is datamish.com. So this is another kind of sentiment aggregator, just like bfxdata.com is. This is for Bitfinex, as you can see. The really good thing about this site, though, is it's very customizable, customizable, or whatever that word is. It's easy to customize. And I'm going to show you guys exactly how you can do that for about, I'd say, 2 to 3 minutes. And then after that, we're going to be talking about the main topic of daily interest rates. All right, so to begin, just left to right. Rates interval. So rates interval, this is just the time frame to change, how you want to smooth your interest rates, as you can see there. Rate type, last price, ask bid. We're going to talk about that in a few minutes. Sentiment interval. This is every how many minutes do you want a short and long change to occur, a short and long change to be reported. So that comes down to this. If I don't like to use this, but if I hit this, and then I, hit 1 hour, it will tell me the change of every 1 hour, as you can see. The reason I don't really like to use it is because, and this gets into what these are, this will tell you every 5 minutes the long and short change. This will tell you every 15 minutes the long and short change. This will tell you even every minute what the long and short change is. So here we have, last minute, 29 longs sold. Here, last minute, 24 Bitcoin were shorted on Bitfinex. Here we have percentage long and short, exactly what it sounds like. API status of margin and lending data. You can basically just use spikes in margin and lending data to identify potential reversal areas. If you see a large spike in, let's say, lending, that could be a market bottom, because a lot of retail traders like to go short at market bottoms, as many of you probably know. And here we just have the USD price on a mountain, or also I think this is known as a line chart, either line or mountain chart. I don't know which one that would be. Short details, this is just the shorts that are hedged, and you can see the hedge rate as compared to the shorts to show how conservative or aggressive these shorts are in the market. And then here we have the interest rates. We have our BTC interest rates and our USD interest rates. The USD interest rates I'm not going to be talking about as much today. Reason being, these are USD interest rates throughout Bitfinex. So if you want to get leverage to go long on, let's say, Bitcoin or Ethereum, whatever, you could take out somewhat of a loan for USD and go long. But I don't really like to use this when applying it to a single coin, because this is going to be data for all coins on Bitfinex, of course, all major coins on Bitfinex that you can receive margin USD funding for. We're going to be using this a lot more. This is lending Bitcoin, and I'm going to show you guys how to use that. But you could use USD rates, I guess, if you were to try to see where crypto as a whole is probably moving. So if USD rates was skyrocketing, then you could probably see that a lot of people are going margin long, which could indicate a market top. But the best part of all is shorts and the interest rates on shorts. So before we get deep into interest rates and the fun that that's going to bring, what does it mean to go short and how do you do it? Well, the reason why shorting isn't really allowed on many exchanges is, one, the laws behind it, especially in the US. Two is that it involves two parties, a lender and a demander. and we're going to be talking about that here as well. So basically, here's how you short something in a 1 minute piece. Let's say you have a friend Greg, and Greg owns one Bitcoin for, let's say, $10,000. Now Greg will lend you that one Bitcoin for 15 days. Is the period of where you'll own that one Bitcoin, and when you receive that one Bitcoin after getting it lended to you, you will immediately sell it. So you do it. You receive one Bitcoin, currently priced at 10K, and you sell it at 10K, and you currently have 10,000. Now what you can do is, let's say the price goes down to 9,000. You just made a 10% profit. You can buy back, and at the end of those 15 days, you still have to give that one Bitcoin back to Greg, right? So you give the one Bitcoin back to Greg that you bought for 9K now, but you have $1,000 spilled over, because remember, you sold it for 10 and you bought it for 9. So therefore, you just made a $1,000 profit. Now let's go a little bit deeper. Greg charges you a 1% interest rate, not a terrible rate, not per day. That'd be insane, but a 1% interest rate over the 15-day period. So you would pay this 1% interest, which would be $100 from my math off 10K. So you would pay the $100, and you would end up with a profit of $900 after your short. And that is how shorting works, and that's basically how we can look at margin funding and margin shorting. Except Bitfinex, of course, is not going to be. You're not receiving lending a loan of Bitcoin from your neighbor. You're receiving it from a stranger on the internet, by a contract, of course. One more thing before we start. Just because the contract was for 15 days, you lend me something for 15 days, that does not mean that I'm short for those 15 days. No. That would be a little tough, and that would be more of an options contract than margin short. Margin short occurs when I short something. I can cover that short, also known as exiting the short, buying back, at any time that I want. Just at the end of those 15 days, I owe the lender back what they lended me plus interest. And that's how it's a beneficial relationship for the demander, the person who receives it, and the person who lends it has a beneficial as well, because they receive interest. And yeah, so that's how the interest rate process works. So let's focus on the BTC interest rates and how we can use them to make money. Well, you can imagine the Bitcoin or Ethereum or whatever coin interest rate as really, I know this is going to sound cliche, but a rate of interest. So if the interest rate's increasing, typically, more often than not, that's going to indicate that many people want that thing that the lenders have. So here would be Bitcoin. So if the interest rate was beginning to increase, as you can see here, increasing there, if the interest rate's beginning to increase, we'd expect that shorts would probably increase too, because demand for shorting is increasing. And if the interest rate is decreasing, that's going to tell us that demand to sell is probably decreasing as well. Well, why does this occur? Well, what you're looking at here is the ask and the bid. These are not the same ask and the bid as the order book, by the way. This is something pretty different. This is the ask and the bid for margin lending. The ask, just imagine as the lenders, the loaners. They lend an asset or lend USD. The bid is demand. So let's say that I bid, I say I'll take a 0.012% interest rate to go short. Then I would place that bid out, and anyone who would want to take up that bid would take it on, and I would receive the Bitcoin to short, and then I would be paying that 0.012% daily interest rate. The ask is going to be the ask that's represented here is the lowest interest rate available from all of the lenders, because of course you don't really care about what some lender who's charging something crazy like 0.5% per day. No, we don't care about that guy, because he's not going to get. I mean, I hope not. He's not going to get someone taking that loaning opportunity. Instead, we're going to be looking at the most the best deal possible if we want to short. So that's what this represents. This is going to represent as you can see here and here, this represents the change in that ask. The ask is going to increase typically when price is moving downward. But not always. Reason that is if many people want to go short, then the interest rate will, rise. And the interest rate's going to rise because not everyone can go short at a beautiful, fantastic interest rate. The market operates in supply and demand. If there's a lot of demand to sell at a lower interest rate, that interest rate is going to continue to rise until there's not a lot of demand to sell. So that's how the ask works. And what's going to happen is the lenders are going to, in a high competition period, are going to try to undercut each other to try to get someone to take their offer. So what I mean by that is, let's say, purely hypothetical, and this would never happen. Some guy's charging 2% interest, and he wants to find someone who's going to take on that loan, who's going to pay 2% daily interest. And as a result, they get Bitcoin to short. Another person says, I also want to lend, but I'm going to charge 1.5. And then he charges 1.5. And then if I'm looking at both these deals, I'd rather pay 1.5% interest than 2. So the 2% interest guy is going to be charging 1%, and then so on until we get to a fair interest rate. And what that's going to do when the interest rate is falling is that represents that there is very high demand for the lenders to loan. And there's very, very low demand for the demanders to receive that loan and to go short. So what I mean by that is if the interest rate is decreasing, we'd probably expect that not as many people are going short and that price is probably in a powerful uptrend. So one last note before we get into some actual examples. One thing that I do have to say is sentiment data tells you historical data. It tells you what people have done. Interest rates do not, and this is where it gets interesting. And this is where you can use the interest rate, tool in your sentiment tool belt. When the interest rate is continue to rise, or when the interest rate rises very quickly, that shows that there's a lot of interest. With BTC, there's a lot of interest to short. If this interest rate was increasing very rapidly, if there's a lot of interest to short, I would expect that price would likely go down. Because remember, these people have not shorted yet. This isn't actual data. This is the interest data. So because of that, I'm going to be seeing that if I see a steadily increasing interest rate, I'm going to be expecting that price is probably going to continue moving downward until that interest rate begins to flip and begins to move upward. So by that logic, I could sell or short or just not buy. And all because the interest rate for BTC lending is increasing. And when the BTC lending interest rate is increasing, that's a sign that a lot of people want to go short. So that's how the ask works. So remember, the ask is going to represent the loaners, the lenders. Now let's go to the flip side. Let's go to the bid. So you can see the bid right here. The bid is going to tell us what the demanders want for an interest rate. The demander's goal is to get as tiny of an interest rate as possible, but that's not always going to be the way to go. That's not always going to be possible. So what's going to happen with a period of high competition is, let's say that the price is going down. Price goes down very rapidly. A lot of people want to short. And we're going to get to a point where some people are going to want to short at any interest rate possible because they're going to make so much money or whatever. So what's going to happen is if the bid begins to increase, this line right here, also represented by this blue line right here, if the bid begins to increase, not the ask, but the bid begins to increase very, very quickly, typically that indicates a market bottom. Reason being, well, if we see a lot of people are desperate to short, typically that's going to occur for those who know sentiment and volume trading. Typically a lot of people are desperate to short at a market bottom. So when people are just demanding, and not really demanding because they'll take any interest rate possible, when people just keep doing this over and over and over and over and over and over and over again, and especially we get to a very high, let me show you an example. Yeah, right here. Interest rate of 0.006%, we jumped up to 0.0013. The interest rate doubled. The going rate to short. This is indicative of a market bottom because this is showing me that people are panicking and will do anything to short Bitcoin right here, as you can see. Let's see exactly what happens at around 33. I'd say this happens like 30 to 33 minutes, right? If we wanted to, one more thing you can do, go to rates interval. You can hit 1 minute. This will tell you the exact minute that occurs. We see a jump from 0006 up to, it doubles at 23, and then it goes even higher at 32. And I'm just hitting the rates interval button right here. And I like to use the auto, but the 1 minute does show you those exact changes, which can be kind of helpful. So from about 0023 to 0033, a lot of people just wanted to short. They will do anything to short. So let's see what happens. USD price from 0022 to 0023. Well, 22, we can see we're at a market bottom. 33, we're at a minor market bottom right here. So from here to here, everyone wanted to short. And look what price did. It went back up. As you can see there. And price just continued moving upward. That's why. Reason being, let's go back, is because the demanders just lost the case and doubled the interest rate that they were willing to take. And that sign of desperation is the sign of a market bottom. So if you want to have an easy, quick takeaway from bids and asks here, remember, a quick jump in the bid upward for BTC or ETH or whatever for shorts, a quick jump in the bid for shorts typically indicates a large amount of panic in the market and a large amount of people who are shorting right now or really want to short. Typically that means market bottom. If we see a quick interest rate fall in demand, that shows us that there's not that much demand to sell. That's probably a market top where the market's moving up so quickly and moving up to such a high that who would ever be crazy enough to short? And then the price crashes right after that, as it normally will. So when the bidding interest rate just goes very, very small, and really no one really is that competitive to short. If they were competitive, the interest rate would rise. That's a sign of a market top. So market top, or also known as when do I want to short? Well, you want to short when the bidding interest rate collapses. You want to probably buy when the bidding interest rate like doubles or does something crazy like that. Remember, the ask is something different. And let's go to an example of the ask just to make sure that this is crystal clear. Because I know this is, and I completely understand that this might be a little bit complicated, especially at first. It's a lot to take in with the bid and the ask and the competition for margin lending. And I will be probably doing a second video just to clear up any questions or to make sure that I explain the whole topic perfectly. So here we have an example of shorts falling and the interest rate falling as well. Completely normal. We can see that the demand to short is decreasing as indicated by the daily interest rate going lower and lower. And the actual short positions are really beginning to decrease as well, as they're not really interested in shorting. Let's look at what happened to price. Yeah, so price was weekly going upward, as you can see here. That began to consolidate, so really not that many people interested in shorting here, as you can see, which makes sense. And you can see it there as well. One more thing, I know it's a little late to mention this. This purple line is the FRR, also known as the flash return rate. The flash return rate is just the average. So this is just the average of margin funding rates in the past. We use this as a barometer. If the interest rate is below the FRR, we can see that there's probably not a large demand to sell with F. If the interest rate is way above the FRR, that means that a lot of people want to sell. So the FRR is a good benchmark, and as you can see, we move quite below the flash return rate. Okay, glad I touched on that. What do we expect to happen here? Well, let's go forward. Interest rate just continues to fall until about here-ish. The interest rate begins to increase, and especially after that rapid fall off in shorts. So what's happening here? Well, what happened was price went down, as you can see here, as many of these shorts exited, and the interest rate continued to fall. And then when the ask of the interest rate was beginning to rise here, as you can see with shorts rising as well, interest to short is beginning to increase. So what do we expect for price? Let's see. We still have to wait for USD price to load. Yep, so as you can see here, the price began to, let me just show you a little bit clearer too. Yep, perfect. This is what I want to show you guys. So recall that the interest rate was actually beginning to rise. It bottomed out around here, and then it began to increase here. The lenders were offering a 0.006, and then they began to offer something like a 0.028 as a high. As you can see here, 0.003% interest. So the interest rate's clearly increasing, and you can see that demand to sell was increasing, so price went down, as you can see here. So we talked about bids and how to use bids in the market. Let's talk about asks, and just a quick takeaway so that this doesn't seem too complicated. When the ask rate is decreasing, that typically means that price would be increasing because the demand to short is decreasing because the market's just moving upward. And we can see that right in action here. Not many people are interested in shorting when it's something like this is happening. When the interest rate when the ask interest rate is increasing, there's a large demand to short, and that is typically a sign that the market will move downward. Remember, slightly decreasing ask interest rate, price likely to move up. There's not a lot of demand to sell, meaning that the bulls are probably in control and the bears are not in control. Increasing interest rate for margin funding of ask on ETH or BTC. Increasing interest rate, people are beginning to become very interested in shorting. And we can see that the interest rate charged is going to go from like 0.0006 up to some crazy things like 0.03. That's an increase of 5 times. And again, you want to use that FRR as well. The closer that this gets the FRR, the higher the demand to short is. So, as you can see here. And as you'd probably imagine, price went down there and then beginning to move back upward as the interest rate began to falter right here. All right, so this is probably going to be my longest video I think I've done that it was not a live stream. Yeah, but interest rates are very no stupid pun there intended. But interest rates are really going to tell you a lot of information about the demand to sell and the demand to buy. You can see how active the sellers are, and you can also find market mistakes like using the bid jump. Typically indicates that a lot of people are eager to sell, meaning that price is likely to go down a bit and then go back up because they sell and then price goes right up, sales right past where they had sold. That's how you use the bid, and then you can use the ask to try to find demand in the market to sell. So the ask is going to tell you, increasing ask is going to tell you that there's an increasing demand to sell, price likely to move downward in the future. Yeah, one last thing is there's also something called as the last price. This really should be called the last rate, not the last price, but this just tells you the last rate that was taken. So remember, there's bids, the demanders, there's asks, the lenders, and then there's last price. So this is just the last rate that was taken from either an ask or a bid, of course. I like to use the 1 minute with last rate, and it shows you all of the rates that were taken, clear here. You can see some people got very good interest rates for selling here, and then some people got terrible interest rates, like all the way up to here. But it's a matter of perspective. Some lucky person was able to lend Bitcoin for a stupidly high interest rate of 0.0795 per day. So that's good for him, but not good for the person who took that interest rate. So yeah, so that's how you use last price. I wouldn't say there's a specific strategy to using the last price. Bid and ask there is. Last price, you could just see, if a lot of people want to sell, if the last price, if a lot of people are beginning to open margin shorts, that could be an indication of the market moving downward. So yeah, and if you see falling last price, that typically will be the indication of the market moving upward because people are taking lower interest rates to get Bitcoin, lower interest rates to short Bitcoin, showing us that the market will probably correct that. All right, now is the end of the video, I promise. After 25 minutes of talking, I think I'm gonna leave it with just the interest rates here. Again, datamish.com is a great website you can use for a lot of different uses, especially if you just want to go a little bit simpler and just use the 1 minute changes or even the 5 minute. That's a really good way to trade, but I think the interest rates are pretty interesting with using, with finding what the ask is and seeing how that correlates to sentiment. If you have any questions, comments, or concerns, you can leave them below. Have a great day.